The union budget is just weeks away. All eyes will be on how the markets will react. We now tell you how the markets reacted to the last 6 budgets. Take a look.
The dynamic nature of stock markets make or break investors' wealth. The stock market is very sensitive to political and economic changes. Coming February 1st, and investors will be glued to their television sets when Nirmala Sitharaman presents the last budget of Modi government 2.0. So how did the stock market react to union budgets since 2019? The Sensex rose over 200 points after the 2019 interim budget. The Nifty too rose before settling down below 10,900 points. Announcements on auto, defence and agriculture did the trick. But the next 2 budgets failed to excite as both the indices tanked. 2021 was a standout year as the stock market soared post-budget. The Sensex jumped over 2,000 points while the Nifty added over 600 points. Government's bumper capex announcement gave a boost to the markets. A year later, both indices rose on the back of a pro-growth budget. But the pair gained by the time markets closed. Last year, the indices rose dramatically before the excitement fizzled out. The Sensex closed marginally in the green, but the Nifty fell over 40 points. The focus now shifts to February 1st. Sitharaman will be presenting an interim budget ahead of the general election. But will it be a repeat of February 2019, or will we see a 2021-like surge? We'll report WION World is one.
And for more on this, we are now being joined by Aditya Shah, market expert and founder, Hercules Advisors. And Mr. Shah is joining us live from Mumbai. Welcome to the broadcast, Mr. Shah.
Thanks for having me on the show.
So my first question is that what does the stock market performance on budget days tell us about the economy?
See, the perspective is that the market is buoyant and we've already seen a move from 18,000 to about 22,000, as you were saying today. The government has already said that since this is an interim budget, there will be little that they will be able to do. But the government is already focusing a lot on the economy. We've seen that the railways is going to spend a capex of 2.6 lakh crores. Roads are getting a lot of boost. Infrastructure on the whole is getting a lot of boost per se. Manufacturing is getting a lot of boost per se. So what the budget is going to do is it is just going to increase allocation to all of these sectors. And the market has already risen in anticipation of some positive capex that the government will really do. So net, the market has risen from 18,000 to 22,000 on the back of some positive announcement that the market really expects. However, there won't be any major moves per se, in my opinion, after the budget, because we have already priced all of that in.
Right, Mr. Shah, you speak of how the expectations for the budget in 2024 seem to revolve around the belief that it won't majorly impact due to its proximity to the elections this year in India. But talk to us about how are the Indian stocks performing and what can we expect on February 1st?
The Indian stock market is in a little bit of euphoria ever since the 4 state elections came out and BJP swept those elections. The markets are now of the belief that in 2024, the current incumbent government will come back and the government will be able to take decisions around manufacturing, around infrastructure and around the economy over the next 4-5 years without any problems per se. So the small and the mid cap side of the market is under huge euphoria. Stocks have gone 5x, 10x. So people need to be really very careful about how they invest in the market per se. But net, over the next 10 to 15 years, India is on a growth story that India has never seen before. And the stock market will create some huge amounts of wealth over the next 10, 15, 20 years per se. So positive on the stock markets, positive on the economy, and positive on the budget as well in the near term.
Right. My last question to Mr. Shah. What are the 3 big things that investors will focus on ahead of the budget?
The biggest 3 things that the investors must focus on is how is the government trying to provide fillip to the manufacturing sector. We know the PLI scheme is already out from out by the government, and the government will take even more incentive steps to boost manufacturing over the period of next 5 to 10 years. Another step is how is the government ramping up its investment on the infrastructure side of it, railways, roadways, airlines, all of these stuff. The government is going to spend money because these spends have a multiplier effect in terms of generating employment, in terms of giving orders to various amounts of companies per se. That's the second thing that you should watch out for. Unfortunately, for the middle class, from the tax perspective, there is little that the government will be able to do this time around. However, the government has said that if it comes back, then there could be some sort of relief for the middle class person. But right now, at this stage, the government will be in the spending mode per se to generate huge amounts of employment. So that those are the two, three things that you need to watch out for in the budget.
Right, Mr. Shah, we'll wait and have to see what the budget 2024 entails. But thanks very much for taking our time and joining us here on the show.